What's up everyone, welcome back to another video with the Millennial Finance. StashAway has very recently launched something that is exciting to me, being their thematic portfolio. They even added ETFs from our favorite Aunt Kathy. Let's see what they have in store. Cha-ching! Before I get started with the video though, I just wanted to say that StashAway has very kindly gave us some merch. So this one is mine, it has my name on it. And they're also willing to give 5 of you a chance to win some of this very cool merch. So just going into it, looks like they have a bottle, a bag, and a really cool cap that says, "My money works harder than yours." So yeah, if you guys are interested in trying to win one of these 5 merchandise, then leave a comment down on the video below. Which one is your favorite thematic portfolio and why? Of course, make sure you watch this entire video so that you know what are the differences between the 3 and which one is the best suited for you. We'll be announcing the winner on Instagram, so do give us a follow if you haven't already. It's at the Millennial Finance. And if you want to sign up with StashAway, then sign up with our link. We'll leave it down in the description below. You'll get 50% off your management fee for the first 6 months. Let's get started. Alright, so what are thematic portfolios? To me, it just means that we are investing in a particular industry or a secular trend that's entirely dependent on you. Previously in StashAway, you just choose your risk index, 20%, 26%, 36%, whatever it is, and StashAway will do all the investing for you. They could invest this money in anything that they choose, so it could be consumer stocks, oil and gas, healthcare, financials, REITs, or even mining companies, right? Now, just a heads up for everyone, it's not that these old portfolios are gone. You can still invest in them if you want, but there are 3 new thematic portfolios that StashAway has come up with that any investor can choose to invest in depending on your goals. I'll get a bit more into detail later on in this video, but there are 3 choices that we can choose from, being technology enablers, the future of consumer tech, and healthcare. Also, there's a brand new 45% risk index that you can go with these portfolios as well. Previously, the maximum of 36, but now it goes all the way up to 45%. Unlike the other portfolios though, this one, you can only go as low as 20%, so there isn't a risk index lower than 20% if you want to invest in the thematic portfolios. Other than the stock ETFs that StashAway includes in all 3 of these portfolios, they also have an allocation to what they call balancing assets. I don't know why they call them that, but it's basically just bonds and commodities similar to other StashAway portfolios. Depending on the risk allocation that you set, you will see a lower or a higher allocation towards these balancing assets. So without wasting too much time, let's get straight into the 3 different thematic portfolios that we can start choosing from. The first one that I'll be talking about is of course the technology enablers. This portfolio invests in ETFs that contain stocks that will shape the way our future will be. Things nowadays are moving at a very fast pace, innovation is through the roof, and these are the companies that will enable this change. Sub-themes for this portfolio include AI, blockchain, cloud computing, robotics, and semiconductors. If you go for the very highest risk level being 45%, you'll have roughly a 15% allocation to balancing assets, and the rest will go to the stocks in this thematic portfolio. Since there are 2 ARK ETFs here, being ARKQ and ARKW, then without a doubt, you should know that Tesla is a very big holding in this entire portfolio. I'm also very impressed or surprised that they have an allocation towards this ETF called Block or Blockchain. This ETF basically covers companies which have something to do with crypto or they're involved in crypto. Some of them could be companies like PayPal, they accept Bitcoin as a payment, and some of them could be purely Bitcoin mining companies. So that's a very interesting move that StashAway is now taking. They do send a lot of emails, a lot of Instagram posts about crypto, so maybe they were planning for this far ahead. However, the allocation of this ETF is only 3%, so it's not too big that it will be life-changing, but it's a step in the right direction. Anyway, like I mentioned before in all our crypto videos, I wouldn't really invest more than 5% in cryptos, so this is pretty much in line with what my goals are. There's also an AI, cloud computing, and semiconductor ETF, which are all industries that I invest in myself anyway. Some of the top stock holdings in its entire portfolio are Tesla, Nvidia, and Taiwan Semiconductors. Now, of course, they also have their Bitcoin related stuff like Grayscale Bitcoin ETF and MicroStrategy. I'm not a very big fan of this grayscale Bitcoin ETF. There are a lot of problems with it. I won't talk about it today, but the allocation of it is still very small, so I guess it's something that I don't really mind. This is overall a very solid portfolio to choose from, and I actually hold or have held many stocks that these ETFs currently invest in. My favorite ETFs from this portfolio is probably the AI, cloud computing, and the semiconductor ones. Cloud computing, a lot of very good software companies, B2B, software as a service. These are all the great companies that have been compounding and did very well actually over the last 18 to 24 months. On the semiconductor front, I guess I don't really have to talk too much about this. We even have an entire video talking about semiconductor stocks and why I think it will drive the future. Next up, we have the portfolio that has a really cool name, being the future of consumer tech. This one looks at the trends in how a consumer, an average consumer like you and I, live our daily lives. So the companies in this portfolio should be much more consumer fronting. For example, there are many great B2B companies, Taiwan Semiconductor, Salesforce. As an average consumer, you wouldn't really know these companies because they sort of work in the back. Through this portfolio, this is stuff like, Shopee, Grab, and Google. These are all companies that you and I or many people know, and this is what we call consumer tech. This portfolio has 6 different ETFs, and StashAway seems to deem this portfolio a bit riskier than the earlier one because even at the maximum 45% risk level, I will still have 30% in balancing assets. We have 2 fintech ETFs here, being ARK Finance and FinX. So it's an industry that I really like, and I do believe that in the future, or in the very near future at least, we will start pivoting towards digital ways of payment. So it could be e-wallets, it could be credit cards, it could be even crypto, right? Then we have ARK's flagship fund, being ARK or ARK Innovation. This ETF is basically what Cathie Wood thinks are the most innovative companies moving forward. Other than that, we also have ETFs in the autonomous or EV space, gaming and esports, and a general internet one. Being an avid gamer myself, the ESPO ETF for sure interests me. Lots of investors I've been reading on Twitter, even boomers, have been saying that they believe that the esports industry is going to be growing so huge, and there's a lot of data coming out that this industry itself is going to have a very high growth moving forward. However, for one reason or another, I have never actually invested in any company that has gaming as its main source of revenue. The top holding in this portfolio is going to be Tesla again. Other than that, they also have big stakes in companies like Teladoc, Square, Sea Limited, and Google. And surprisingly, all 4 of these stocks are on my long-term investing portfolio that I have with Interactive Brokers. They're all awesome companies, and it's very nice to see that these companies I own in my own investing portfolio has also made it as top holdings in this thematic portfolio by StashAway. Out of all 6 of these ETFs, my favorites will probably have to be ARKF and ARKK. So props to Cathie Wood, both of her ETFs are my favorites here. Moving on to the final thematic portfolio being offered by StashAway to us investors is the healthcare innovation one. Over the last 2 years especially, I think things have really changed for us, and it changed how we look at healthcare and the things that drive it. For example, I'm sure most of you know that Moderna has a vaccine. What most of you may not know is that they're using this technology called mRNA, and before this, there has never ever been a vaccine that has been approved using this technology before. So this was the first one, and it really opens up a new field where people start to look at it and see how this can be used in future vaccines. This portfolio has 7 different ETFs, and it is deemed the safest by StashAway because at the 45% risk level, I am 100% in equities. I don't have any balancing assets at all. To be honest, a while back, I've admitted defeat. I stopped investing in healthcare companies as a standalone because I just realized that I don't understand these companies enough, so ETFs were the way to go for me. Out of the 7 ETFs listed here though, the only ones I've ever heard of is ARK Genomics, the biotech ETF, and the healthcare ETF being IXJ. It's very interesting to me that they have 2 separate genomics ETFs here, being ARKG and iDNA, and each of them has an 18% allocation to this entire portfolio, meaning as a whole, roughly 36% of this portfolio is in genomics related stocks. That's a very high amount. I have no doubt that genomics will probably be the future of healthcare. Again, I don't know how or why, but It's a big bet, and most of these companies shouldn't be profitable in the near future. The biotech ETF is another one that I've been meaning to invest in for a long time. I've been looking at individual stocks and I realized that there's just no way for me to understand the intricacies of the technology, their pipelines, and whether their drug is going to get approved or not. So investing in this ETF, this is probably the best biotech ETF out there, and it's nice to have it included in the StashAway portfolio since I have been procrastinating for so long. Some of the notable top holdings in this portfolio are names that most of us should be familiar with. All of them are actually vaccine makers. Actually, it's Moderna, Johnson & Johnson, Pfizer, and even AstraZeneca. Of course, these are not just great companies because they developed a vaccine recently. They also do a lot more stuff and they constantly develop new vaccines. So, having looked at all three of these options, I tried really hard, I thought a lot, I used my brain so much to decide on one, but I just couldn't. So what I did was I invested in all three. To start things off, I put in 100 ringgit in all three portfolios, and I also set up a recurring deposit for all of them so that I don't have to think about this and it keeps going every single month. The healthcare thematic portfolio will get 100 ringgit per month, while the technology enablers and the future of consumer tech will get 50 ringgit each. The reason for this is not because I like the healthcare one the most. In fact, I can't really tell which one is my favorite right now. But it's because when I'm looking at my overall stock investment portfolio, healthcare is one that I'm very underweight in. As I mentioned earlier, when I'm talking about the top holdings in the first two ETFs or the first two portfolios, I have a lot of those stocks in my investing portfolio with IBKR as well, but I don't have a lot of healthcare stocks. In fact, I have none at all, which is why I'm putting more money towards the healthcare one. This goes to show that investing, you guys can't just follow someone, right? Because everyone has a different overall portfolio, everyone is at a different stage in their life, and everyone has a different way to invest. Also, I've maintained my standard 36 and 26% risk portfolios with StashAway. I did this because that gives me some diversification. I'm afraid that I will go too much into the same companies, and by maintaining them, I will have exposure to oil and gas companies, REITs, commodities. And I know I always say how I don't like them, but at the end of the day, it's still diversification and there's no harm having a bit of money there. However, I did reduce my monthly ads into both of these portfolios. I wanted to just shift this money towards its three new thematic portfolios, and I'll just see from there. Maybe I'll shift it back, but who knows. So before I end the video, I just want to conclude this whole thing by mentioning some of the key notes that some of you may miss out on these thematic portfolios. First of all, they are very high risk investments, especially the technology enablers and the future of consumer tech ones. So we should expect volatility. We shouldn't be too caught up with 5, even 10% drops, because these things are normal. If you don't know what to do or how to manage investments that are currently in the red or are down, then watch the video that we posted 2 weeks ago about what options you have. The second thing that you need to take note of is that you need to be aware that these portfolios are actually your choice, and StashAway will most likely or will probably not change the theme of it unless you decide to. So for example, in the old portfolio, of course, you just put 36%, and when StashAway thinks oil and gas is going to be a thing, they will shift your investments there. However, with this one, if you choose the healthcare thematic portfolio and healthcare stocks start to go down, StashAway is not going to say, you know what, I'm not going to invest in healthcare anymore, because that was the choice that you made. So remember, if you want to invest in this, then you probably need to be a bit more active. I'm not saying that you have to be so active, but you just need to keep track of all these industries that you chose. Finally, the last thing I wanted to mention is that all of the ETFs under these portfolios have slightly higher management fees than usual. And when I say that, I don't mean that StashAway is charging us more. In fact, I think they're charging us just the same as any other portfolio. But since most of these are actively managed ETFs, they do charge a slightly higher expense ratio. For example, ARK, they charge around 0.75% on an annual basis, compared to something like the S&P 500, that's probably around 0.1 to 0.15%. This is not a deal breaker to me. I always know my numbers. I just wanted to give you guys a heads up, but as usual, you don't have to fork out any money to pay for it. It's all reflected in the returns. That wraps up our thoughts about StashAway's new thematic portfolios. In summary, I really like this move and I'll be looking to invest more here. Maybe one day StashAway will start adding more thematic portfolios, and I will still be indecisive and I will have tens of different portfolios with StashAway. If you want to win some awesome merch from StashAway, including this very cool cap, then leave a comment below which thematic portfolio is your favorite and why. You can also sign up with StashAway using our link. We'll leave it in the description below. It will give you 50% off your management fees for the first 6 months, and it really supports the channel as well. Thanks for watching till the end, guys. Give us a big thumbs up if you haven't already, and subscribe to the channel. See you guys in the next one. Peace out.